Hello, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully, all of you had a very nice weekend. And in today's action, guys, well, we saw some continuation of the declines that started on the Friday session, pouring into today as well. A lot of factors are at play right now, but what we can clearly see is even through the month of January, guys, there has been a narrative shift, especially since Trump was elected in November, which spurred a renewed interest in his campaigns and his policies, sparked the market to have a tremendous rally, and now we've seen the shift over the last month and a half, 2 months, as Trump takes office, implements the same policies that he was talking about. The market does not like it. We've had a shift from an optimistic one to now a pessimistic one in relation to his tariff policies, what Elon Musk is doing with Doge in terms of cutting government spending as well. And we have seen some upticks in what consumers believe the inflation rate will be in the future, largely due to all of these tariffs being implemented. So we have a clear market narrative shift, but this is nothing new, guys, right? Over the past few weeks, it's been a very volatile market to say the least. And on the channel, I have been saying that this year is probably not going to be as easy as 2023 and 2024. So we got a lot to talk about in today's video. Speaking of that, number one, what we're going to be going through is explaining for about 4 or 5 minutes what is exactly happening in the markets right now and my opinion on the fact of the matter. Am I still bullish? Am I still bearish? And what I plan to do. Number two, we have a couple earnings that we have to go through as well. We're going to take a look at 3 corporate earnings, quite briefly perhaps. We're going to cover Domino's Pizza, Berkshire, which came out over the weekend, and Hims&Hers, which a lot of people have been interested in recently. We'll take a look at that in the second segment of the video. Now, in the third segment, we're going to take a look at our technical analysis breakdown because we know that we've had some very wide moves in the last few days. So always key to remember who is in control of these charts on the technicals, on the SPY, the QQQ, our major indexes, then dive into our big tech names and see the same thing. Where are there possibly deals to be had in this market, especially in relation to our Mag 7 names? And lastly, to cap it all off, we'll do a quick portfolio review to show you guys which trades I am in right now and which ones I am keeping for the week as well, and what exactly is going to be my trading plan here, embarking in, or rather continuing in this very volatile market that kind of started with this December 18 candle when Jerome Powell kind of threw us a curveball. So without further ado, guys, let's start off the video. Should be an action-packed one. Let's get it underway. So the SPY down about 0.46%, the Q's down about 1.18%, but what you will notice here, guys, is it was not a broad market sell-off today, the likes of which we had Friday. There was still some decent rotation to be had, depending what sectors you were looking at. Here's what the heat map has to show. Largely today's downside was all of big tech except for Apple. SaaS companies, as well as some of your semiconductor plays as well, were largely down. But look at the bottom half of the market. Now, some of the banks were not participating, but the credit card players were not doing too bad. Berkshire had good earnings as well. The insurance division had a very good session as well. Consumer defensives, mixed, but overall up and to the right. And the bottom half of the market also pulling its own. I wouldn't say it was a very healthy bottom half of the market, but definitely not a broad-based sell-off, the likes of which we saw on the Friday session, which leaves us on the group relative performance. Take a look here, guys. Several sectors were in the green, more of defensive nature ones, but the ones that got hit the most, technology and consumer cyclical. A lot of the growth stocks have been pulling back really, really hard as investors now shift from a tone of cautious optimism to now cautious pessimism. And you're seeing that rotation from growth over to value. We had a similar rotation happen in the months of September and October, if you guys do remember. So we will be paying special attention to that rotation in the markets in the next few weeks of time. But tech and consumer cyclicals, guys, largely led to the downside by Amazon and Tesla, the 2 largest weights in that sector overall, which leaves you on a 1-week relative with Friday and today, guys, almost everything in the red except for healthcare and real estate overall. So definitely not the prettiest picture of the market on the 1 week, nor on the 1 month. The 1 month is starting to get eroded. But are there any massive levels being lost right now? And are we having a broad-based fear sell-off? No, not quite just yet. Take a look as well at your fear and greed index. We are now at a 29 read, despite being just a few sessions removed from the all-time highs, very close on the SPY. Somehow, the markets are extremely fearful at the current point and also maybe into the medium-term expectations as well. Market momentum is now at extreme fear levels, but that's good. This usually represents a buying opportunity. Net new 52-week highs and lows are also down, and stock price breadth has been curling over largely since the Friday session. If you take a look at your percentage of stocks above your 20-day moving average, that is now back down to 30%. And I always say, guys, when this one comes down into the gutter, 26 down to about 20%, you can take a look at historically, guys, always usually a good buying opportunity. And this goes back all the way through COVID. So a few more days like this where people start panicking could be a very nice opportunity to go shopping. And I'm already starting to go shopping myself. Percentage of stocks above their 50-day moving average, they are up 39% right now. Not quite the lows that we've seen in the last few years. If we come down to 35.30, also similarly a decent buying opportunity. And percentage of stocks above their 200-day moving average, that is still sitting at roughly 49.50, a relatively okay read, but nothing to scream home about, of course. That can dip lower. And as a matter of fact, in 2024, it did dip lower a few times, namely in August when we had that Japanese carry trade sell-off, and after the Jerome Powell incident in the later stages of December. So overall, the market breadth, not the best, but is everything completely falling off a cliff? No, we are seeing some sectors rotating right now, which can prove to be quite good for the markets overall if you are looking to buy the dips on high quality, high conviction companies, which is what I always preach on the channel as well. So before we move into more technical analysis here, guys, let us do a quick recap of exactly what is happening, guys, what has been going on, why did the markets drop on the Friday session, of course, right? So well, it first started off here, guys. You take a look at the consumer sentiment index and your consumer inflation expectations, right? 3.5% versus the 3.3% expected. And the 1 year forward expectations are now at 4.5%. However, Tom Lee did a piece on this over the weekend. Essentially, what happened, guys, is you have a pivot. Now, this is a consumer survey, and obviously, consumers have different political affiliations. What you'll notice if you break down that survey is only people who are saying that inflation will be going higher, 4.55%, are all on the Democratic leaning side, whereas the Republican candidates who answered this survey, or Republican voters rather, who answered this survey, are all still planted at a 2.5% inflation rate for the next 12 months. So this survey, you have to take it with a little bit of grain of salt, of course, right? If you voted for Trump, essentially, you think that what he's doing, his policies are going to be a net positive for the economy. If you did not vote for Trump, of course, well, then you might be a little bit worried and not agree with what he's doing with the economy right now and not see the purpose of these tariffs and what he's trying to do in terms of many, many other policies as well. And I will remind you guys, we cannot take these policies in an isolated fashion. This is really going to be a case of the sum of all parts. We brought this up when there was first news about the tariffs on Mexico and Canada, which caused the markets to drop. You guys remember, 2-3 weeks at this point, still that day about 2% before recovering thereafter. The policies, of course, are deportations and the impact on the labor market. Elon Musk is also purging a lot of government staffing members right now, and we know that a lot of the jobs data recently has been bolstered by new government jobs, so that will not be able to keep the unemployment rate, quote unquote, artificially low. So that is also something that people are looking at. However, that and the tariffs are the two possible net negatives here, but the positives is Trump is also going to be doing some corporate tax cuts, which are good for all the corporations that we're looking at in the markets, allows them, if they're saving money on taxes, to keep more of their labor force employed. So we should not be seeing mass layoffs by corporation because that is an offsetting factor. And number two as well, we have loosening regulations for US companies as well. And we have to remind ourselves, guys, what the macro data is now. The market, I will always remind you, is a game of narratives. You may not agree with the reasons of the sell-off. You may not agree that the market is viewing Trump's policies as negative, but what we think, guys, does not matter. The market will move and react and create a narrative that it wants to see play out, even though we do not have any of that supporting data just yet. The data that we have right now, if we want to stay completely objective with these markets, now, is that the Fed has ample tools currently. They can cut rates and they can do quantitative easing. This is a long way away, but just to say they have those tools at their disposal. If ever the economy was to erode in a significant fashion, they can use those tools. Number two, the economy is currently still strong at about 2 to 2.5% median GDP increase over the next 12 months. Now, good thing, We also, over the course of this week on Thursday, get the GDP number, and the estimate is for about 2.3%. That is definitely not synonymous with a contracting economy, at least to show what we had in Q4. We also have a SPY EPS projection of 12 to 15% growth in 2025, and the jobs market remains resilient, low unemployment. We just got the unemployment rate just a few short weeks ago, and it was at a cool 4%, which is at historical lows. So the data does show that, yes, are consumers still picky with their spending? Absolutely. That's been the case for the last 12 to 16 months at this point. That should be nothing new. But are things getting progressively worse? And the answer objectively is no. Are there some potential apprehensions on the horizon for the impacts of tariffs? Yes, but once again, we do not know how long the tariffs are going to be in place, what the net retaliatory effects by other countries are going to be, and how overall it will affect the consumers. Broadly speaking, right? How much quantifiably is going to be a result in net inflation? Will it bring more jobs back to America as well? How will it affect employment, the deportations as well? They're in after, right? So the market is trying to price in all things that it does not know. And even Jerome Powell, when asked about this in the last two Federal Reserve meetings, they were also saying that yes, they can predict to a certain extent what the impacts could possibly be. But Jerome Powell said literally that there are too many factors at play to make a decisive conclusion as to what the economic result is going to be from all of the combination of these policies. But for now, you guys can see a clear market narrative shift here from one in November, which was optimistic about Trump being in office. And now, ever since the month of January, every time there is a new policy put forth, whether it be what Elon is doing with Doge or what Trump is doing with tariffs, it is always viewed in a negative light overall. So you have to take things at face value, guys. Just understand one thing is for sure. I'm not trying to predict the markets, and I'm not saying whether the narrative is correct or not. You guys know I try to stay as much apolitical on the channel as I possibly can. Objectively speaking, the data right now is not falling off a cliff. The data still shows that yes, the economy is resilient, but are we in a boom growth cycle? No. But also, are we falling off a cliff towards a deep form recession? No, we do not see that either, right? That is the objective data for now. We will keep monitoring this data as it comes in, of course. But the one thing that we do know is that the markets will remain volatile. So what do we do in volatility, guys? The same thing we always do. We always look to buy high quality, high conviction companies at great prices, not chasing Palantir at $125, not chasing Hims at $70 per share, not chasing all the small modular nuclear reactor plays, not chasing the ASTSs, the Rocket Labs, and getting trapped at the top amidst all of this volatility, guys. If you want to safeguard your portfolio, can you raise a little bit more cash? Absolutely, right? However, it is not the time in this current market environment. You can clearly see the market is not risk on right now. So why would we be going extremely heavy on the risk on side of the market? It does not make sense. Focus on high quality, high conviction companies, and you should be making it out just fine. So that is our introduction segment on what's been happening and the reason for the declines in the last few days. Just understand it can get a little bit worse before it gets better, but we've had this now for the last 2 months, guys. Big swings to the upside, big swings to the downside, and I do not think that will stop, at least for the next 30 to 45 days, as we get more and more policies out of the Trump administration overall. So that being said, that is everything for that. Now let's dive into our earnings section, shall we? So the first one we're going to be covering, guys, is going to be a big one, and that is going to be, if I can pull it up as a matter of fact, and it's going to be Berkshire. So Berkshire coming in with their earnings over the weekend, and today up about 4.11%. Berkshire, I mean, the earnings for Berkshire should be and always have been boring, right? It's an extremely well-run company. And no, it is not only Warren Buffett's investment portfolio. Berkshire is a conglomerate. They operate in many different segments of the market, from real estate to somewhat utilities plays sometimes, to financials, namely insurance corporations, to other retail consumer-facing companies as well. They have so many different aspects of the business, guys. It is a very well-rounded company. The investment division of the company is just one portion of the company overall, but that's the one that everybody likes to focus on. So what exactly did Berkshire report? Well, they had a massive beat on EPS here by about 45%, boosted by the insurance premium revenues over the last year. We know that insurance was one of the largest components of service inflation through 2024, and Warren Buffett and Berkshire Hathaway largely benefiting from that drastic increase in insurance premiums. And you can see that in the bring forward of the EPS here, 46% to the upside, and a beat on revenue by about 3% as well. Now, we're not going to tackle everything, but we're just going to tackle a few key points from the Berkshire earnings, which show that Warren Buffett, although sitting on a ton of cash, may not be as pessimistic as you guys might think, right? So moving on here, Berkshire operating earnings surged 71% in the fourth quarter. Cash hoard balloons to a record $334 billion. Now that's only up $10 billion from last quarter, but Warren Buffett has been buying for the investment side of his portfolio, which we'll look into in a few short minutes. So the Warren Buffett-led conglomerate said its operating profit, which encompasses earnings from the company's wholly owned businesses, skyrocketed 71%. Beautiful boost in operating profit. Now, most of that, 302%, is from insurance underwriting overall, and insurance investment income ballooned by nearly 50%. But still, got to call it how you see it, right? Tremendous quarter for them. And that's the good thing about having exposure to so many different industries, right? When one of them booms, it really boosts your top line, especially insurance, which is usually a decently high margin business, especially for wholly owned companies such as Geico, which Berkshire owns, right? Now, operating earnings also popped 27% for the full year. Here's what Buffett had to say. In 2024, Berkshire did better than I expected, though 53% of our 189 operating businesses reported a decline in earnings. Benefit of diversification, I assume, right? We were aided by a predictable large gain in investment income as Treasury bill yields improved, and we substantially increased our holdings of these highly liquid short-term securities, so putting that cash to work in the risk-free assets. Our insurance business also delivered a major increase in earnings, led that by the performance of Geico. Now, in terms of the cash, let's have a look here, shall we? Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. This is from Warren himself, right? And that preference will not change. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money into equities overall. Now, in terms of that cash, everybody likes to reference this chart right here. Berkshire is sitting on a record level of cash. As a matter of fact, this is not the correct chart overall. This is an outdated one, but this new one should be about $334 billion. We're not going to focus on this chart. That's why I can use an outdated one. It would be at record highs, and everybody says they're holding record cash highs. Face value, yes, the dollar amount of cash is at record highs, but here is a chart dated from literally today pretty much, which is the cash as a percentage of assets that they hold. Yes, we are now higher than 2004 and 2005, but you can see that, are we significantly higher? No. So although Warren is holding a ton of cash, a lot more than in recent years, that's for sure, they always like to maintain a very steady cash position. You can see that even into the pandemic, the years prior, 2018 or whatnot, always between about 15 to 17%. That was the case largely until 2022, 2023. And then most few recent quarters, since he's been liquidating a lot of Apple, a lot of Bank of America, the cash pile has now ballooned overall. But is Warren Buffett still buying? Yes, he is indeed buying. So you can see that Berkshire is not sitting all in cash. A majority of the cash is still being deployed, which is what Warren Buffett has said himself overall. And if you take a look here, has he been buying? Yes. What have they been buying? Well, they reduced Bank of America. They bought more OXY. They bought more VeriSign, more Sirius. They also bought more Domino's Pizza as well, initiated a position in Constellation Brands, and they also added to their Pool Corp position, reducing reducing LPX, reducing a few other companies right there in terms of media and communications outlets overall. And Warren Buffett also does see some very bullish price action and very bullish trends in the Japanese companies that he's been buying as well. Companies like Mitsubishi, and largely a lot of the bigger players, right, in the Japanese markets, which unfortunately are not on this chart right now for these holdings right there. But I'll say that for next time. But just understand that he is very, very bullish on the Japanese side of the market. He believes that those stocks, especially the let's call them as well, conglomerates in Japan are also somewhat undervalued. So that was the main takeaway from the Berkshire earnings overall. Fantastic company, well-diversified company. Would I buy it up here? No. But was I buying it down here for some swing trades, 460 to 450? Absolutely, right? We're going to be looking for the breakout, retest, and possibly run. If we can see Berkshire maybe back down to 475, something like that, 475, 470. This area right here, I would be looking to buy. If you're holding this one as a part of a long-term portfolio, I see no reason to sell at all. Fantastic company managed by one of the greats, right? And I even think that if Warren Buffett were to pass away, eventually this company is such a well-oiled machine that even without his direct input anymore, I think that the company will be doing just fine because of how well diversified it is overall. So that is a very, very brief take on Berkshire. Hopefully you guys enjoyed that. Now for company number 2, we're going to be taking a look at Domino's Pizza. So Domino's Pizza, one of the companies that Warren Buffett added to heavily, almost doubling his position, initiated the position 2 quarters ago at this point. Now, last quarter, adding another 86% to the position, still a very small position in the grand scheme of things in his portfolio, right? However, he did add, he must see some value in this company. This is a very traditionally defensive company overall, guys. They have a lot of pricing power. Domino's Pizza can afford to keep their promotional rates at what they are, same as McDonald's. So when the economy is not doing too well, when consumers are a bit tight in terms of their budgets like they are right now, Domino's Pizza, despite being able to increase prices, does not increase them drastically and always does have the same items on its value menu, similar to McDonald's. It's a very, very sticky business model. Do they have the best pizza in the world? Obviously not, guys, right? But is it a more value-oriented play? Absolutely, I do believe so myself as well. They did increase their dividend too. The stock after earnings was down roughly 6% before investors said, you know what? This may not be the worst deal overall, as it came into support of 430 to 425. So take a look at their earnings here. Missed on EPS by 0.2% and miss on earnings by about 2% overall. But to be quite frank with you guys, the data for Domino's was not that bad. As a matter of fact, it was fairly decent for the quarter and for the year, despite those two misses and weaker than expected same-store sales. So global retail sales growth of 4.4% in the fourth quarter, 5.9% growth for fiscal 2024 overall. This is very decent, guys, in terms of sales growth for these types of companies, right? If you look at McDonald's, you look at Chipotle. Chipotle's been growing faster recently as it expands its business, but a more mature company like Domino's Pizza, 5.9%. I mean, quick service restaurants, guys, if you can increase global sales per year 5 to 7%. That is really the standard for the industry, so I see no problem with Domino's here. US same-store sales growth of only 0.4% and 3.2% growth for fiscal 2024. We know that that has been the main issue for Domino's Pizza overall in the last year, but it is not degrading right now. The company does see that to return to a roughly 3.5% long-term average here, 2025 and beyond. Global net store growth of 364 stores, 775 for fiscal 2024 overall. So still, the business is growing and expanding in target markets. Income from operations was up 6.4% for the fourth quarter, 7.3% for 2024, also decent. And the board approved another 15% increase in quarterly dividends. So the company does not see any problems with free cash flow, or they would not be increasing the dividend by such a substantial amount. Here's what the CEO had to say. Domino's results demonstrated that our hungry for more strategy can drive strong order growth count even in the face of a challenging global macroeconomic environment. The hungry for more, of course, is all the promotions they've been rolling out over the last year. McDonald's has been doing the same to retain that customer base and drive more sales. In our international business, we delivered a remarkable 31st consecutive year of same-store sales growth, with our sales improving in the fourth quarter. Definitely a very, very, very resilient business, guys. I want to take a look at this one overall. Yeah, I mean, they put together a really nice slide right here in terms of their beat. I mean, gross margins are good. Net margins as well are now sitting very pretty too. 11.7% net margins, 10.4% free cash flow, which is very, very solid, guys. I mean, this is just a very high quality company overall. Now, you may not like the brand, but I'm just here to tell you it is a very sticky brand overall, right? And here's the other key facts: 7.7% boost in net income. 2026 growth estimates, we're looking at a 15% revenue compound annual growth rate, which is going to be for the next, this is a mistake here. This is going to be for the next 2 years combined, roughly. So they're not growing at 15% year over year in terms of revenue. The revenue should be expanding about 7 to 8% overall. on a per year basis. EPS, this is very good too, and free cash flow expansion should be very good, guys. So overall, guys, not that bad of a report from Domino's Pizza. Was it the best report in the world? No, but does it show that this is a very high quality, resilient company that is able to adapt in the face of a, as the CEO said, challenging macroeconomic environment? Yes, absolutely. Now, is it a company that I would be putting in my long-term portfolio? Probably not. I don't really own many restaurant companies in my long-term portfolio at all. I don't own McDonald's. I don't own Domino's Pizza because sometimes, even though they are resilient, they are a bit cyclical in their nature. Only the few retail stocks that I have in my long-term portfolio, guys, talking about Amazon, Costco, essentially, those are really the two consumer-facing ones. Walmart is also a very decent pick because it's more broad, right? Domino's Pizza, McDonald's, although they're very solid, they're somewhat niche in terms of a specific brand play. They do have their competitive advantages, they do have their moats, but this is just not a long-term position for me. But for a swing trade, is this a nice area for a swing trade? And you can copy the legend himself, Warren Buffett, right? He must know. I mean, that's why I'm not spending too much time on the valuation. If Warren Buffett's buying the company, safe to say that he does agree with the valuation and does see that there's good prospects on the horizon for the business. Is there a swing trade from here? I do think so, guys. 450 down to roughly 400 is the liftoff area. I've played this one on the channel publicly a few times when it came back down into the 425, 400. So if the market continues to be difficult on the SPY, the QQQs, and we see Domino's pull back down towards its 200 weekly EMA around 425, 400 in this horizontal support, could be a very nice area for a swing trade. You can see it's a very solid area, guys. Support, resistance back here. Also acted up all the way back there. Resistance back here too. Very solid company, very decent level of price action. I would not mind playing this one for a swing trade, but do I put it in my long-term portfolio? No, it's just not growing fast enough for my liking, which is why I do not have it personally myself, but a fantastic company overall, nothing really bad to say. And that is it for company number 2. And now we get in to the one that everybody wants to hear about. I get a lot of questions about Hims and why I'm not investing in Hims overall, despite the fact that they've been extremely viral recently, extremely popular. Their stock price has gone from $20, $15, $20 to over $65, almost $70 at one point last week in a very short period of time since the month of September, roughly, right? So you're looking at like a 4x, 5x almost in just a few short months. Now, we're going to go through their earnings, and then I'll give you guys my opinion on Hims stock overall, because a lot of people like it, and they think it's the next Palantir. But you have to understand what the company's business model is, what is their competitive advantage, and who are their competitors. So let's get into their earnings, shall we? The earnings, they beat on EPS by 1.53%, beat on revenue by about 2.3% as well. Now let's take a look, guys, as to why Hims has been down an absolute ton in the most recent few days. And even now, after earnings, the company dropping a whopping 20% after earnings. This is why I tell you guys, stop chasing momentum stocks at the high. It never ends well. Can you get lucky on a few of them? Yeah, but more often than not, guys, you're going to lose your shirts, right? The company in just a few short days, talking about 4 days of trading, is now down 42%. As quickly as it came up, as quickly as it will come down. Let's take a look at their earnings, shall we? So Hims&Hers shares tumble after company misses on margin, and it was a very tiny miss, but when it's run up a lot, those earnings have to be absolutely perfect. Says they may stop selling some weight loss drugs. Why? Well, they're competing with two of the best in the world, Eli Lilly and Novo Nordisk. And that's not the only people they're competing with for their entire suite of products. And we're going to get into that in terms of my opinion on the company. Revenue at the telehealth company increased 95% in the fourth quarter from $246 million during the same period last year. This is true, guys. Hims is growing their revenue and their EPS at very attractive rates, right? They're growing revenue at about 17, 19% per year, EPS roughly the same. Take a look, EPS now coming into positive territory, but it's not the best EPS growth overall, and revenue is growing at extremely attractive clips here. However, you're not seeing like a doubling of revenue every single year, but are they growing revenue high teens? Absolutely, and that's very good for the company. A large increase from just a few short years ago, yeah? Let's continue, shall we? The company's gross margin, right, was 77%, which was down from the expectation of 78.4%. I'll remind you guys what gross margin is. Gross margin is basically you sell your product, then you have cost of goods sold, right? Now, obviously, these pharmaceutical products, they're very, very cheap to produce. And Hims produces some of them themselves, but a lot of these drugs that they're using, if you guys don't know what Hims does, right? They do weight loss products, hair loss products, erectile dysfunction products. So a lot of the things that people usually have issues with, like, you know, the things that a lot of people have issues with, hair loss, erectile dysfunction, obesity, they try to tackle. But are any of their products new? Absolutely not, guys. Most of these products, largely, except for the GLP-1 side of things with the weight loss drugs, a lot of the products, guys, like how long has Viagra and Cialis been around? They've been around for 30 years. How long has finasteride been around, right? Or minoxidil for hair loss? It's been around for 30 years. The company is not doing anything new. However, are they taking existing products, repackaging them in a relatively appealing way, and doing very nice ads for viral marketing? Sure. But that is literally their entire competitive advantage, guys. They do not have economies of scale. They do not have pricing power either. Amazon and Big Pharma can literally price them out of the entire market. And as a matter of fact, they already are, right? But this company is relying on its advertising and marketing to drive subscription services on a monthly basis, right? So essentially, is it a groundbreaking pharmaceutical company that is developing brand new treatments that work better than the entire industry can? No. Is it an advertising company who knows how to appeal to target demographics better than competition? Yes. But is that a competitive advantage that I'm looking to bet on specifically? Not really personally, but we'll get into that, right? So I'll remind you what gross margins are. Gross margins are revenue minus cost of goods sold, right? You can see they used to have high gross margins, and now as they scale, oops, gross margins are coming down. Now they're back up into the 70% range, but for a company that like what Hims does right now, which is slightly pharma, right? Do they have very high gross margins? Yes. Can they bring more of that to the bottom line? Well, it depends, right? It depends because most of their shtick, right, is the fact that they are a largely a marketing and advertising based company. As I said, do their products work better than the competition's? No, they're using the exact same products as the competition. They're just packaging them better and they're marketing them better. So the marketing spend in terms of operating income, the marketing spend will always be high. Do not expect that to come down. That is their entire shtick. That is their business model. That's how they will attract customers and retain customers as well. So my worry for this company is what is going to be their terminal net margin rate? And if it's only between 10 to 15%, that's not good enough, guys. They will get priced out by Eli Lilly, by Novo Nordisk for the GLP-1 drug suite. They will get priced out of the market by Amazon and Big Pharma for everything else. As a matter of fact, it's already happening. I'll give you guys one quick little example. This is just one example. You can go through all of their products, and this is always the case. Amazon can sell finasteride, which is a hair loss product, right, at $16 per month on Amazon.com, one-day shipping, yeah? But if you like the Hims ads and you were seduced by the Hims ads, well, you can buy that exact same product on the Hims website for $22 a month. Same product. Which one would you guys choose, right? Eventually, my worry is that consumers will get a little bit smarter and realize, like, well, they're not actually selling me anything new, yeah? So they will never outscale Amazon nor Big Pharma, ever, trust me on that one. And so they are lacking economies of scale. They are lacking pricing power in the long term. That is why I do not like this company overall, and why I have not traded. I've traded this one a few times here and there, but I would not put this one in my long-term portfolio. It's the second biggest drop for Hims&Hers in a matter of days. The shares tumbled 26% on Friday after the US FDA announced that the shortage of semaglutide injection products has been resolved. So there was a shortage, right, from NVO and Eli Lilly, so people were pivoting to Hims. Now that that's been resolved, well, unfortunately, no more Hims. And worse than that, Hims was selling what you call a compound semaglutide, so not even the injectable versions, and the FDA straight out banned them. They said that on Friday it will start taking action against compounders for violations in the next 60 to 90 days. On the earnings call, they said as a result, compounded semaglutide will not be offered on the platform after the first quarter. We will have to start notifying customers in the coming month or two that they will need to start looking for alternative options on the commercial dosing side. I would suspect, said the CEO, just being very direct, that a lot of those patients will try to go into the open market and try to secure a branded option in some form factor. Shout out to Novo Nordisk and shout out to Eli Lilly. The company's weight loss offerings will primarily be composed of its oral medications, which do not work as well as the injected versions, and generic medication liraglutide, which it plans to introduce on its platform this year. This is not as good as the other ones that they had, which they are no longer able to sell. Excluding contributions from compounded semaglutide, Hims&Hers said it expects weight loss offering will generate at least $725 million in revenue in 2025. Yes, but how much can they scale with an inferior product to the competition? So they will be growing. How much can they scale? How much market share can they take of that whole market? Well, their marketing is going to have to be pretty darn good because it's definitely not going to be testimonials versus the competitors' products. Hims&Hers also offer treatment for skincare, mental health, sexual health, and hair care, none of which are proprietary to the company. They have not invented anything. They're very good at repackaging things, though. The success we are experiencing is a direct reflection of our improving ability to democratize access to high quality, basically market personalized care across each of our specialties. Net income climbed to $26 million, which is a 5% margin, guys. It's not going to get it done. Not when you're competing against Big Pharma and Amazon, right? For the first quarter, Hims&Hers expects to report revenue of $520 million to $540 million, while analysts were slightly below that at $497 million. So they had very good numbers, right? Very decent numbers for this quarter overall, despite the fact that the stock was down. They did have very good numbers, face value. They beat on their guidance as well. But my gripe with the company, I hate to bag on it so much, but it's like you have to always ask yourself when you're looking at companies, guys, what is a competitive advantage? This is a pharmaceutical company, but it's under the guise of a marketing company to change people's life and, as they say, democratize access to many different products, which for all intents and purposes have been democratized for the last 30 years. They have been on the market. You can go buy Viagra, you can go buy finasteride, you can go buy minoxidil. Everything's on Amazon pretty much, right? A lot of it non-prescription either. So is this one a good swing trade? Not for me. Not unless it comes back down to maybe $30. I might nibble a little bit all the way down there, but I need to see all this frothiness come out. I need to see everybody get crushed, lose hope in the stock, and then maybe I will swoop in for a buy. 35 down about $25 is my target range. That being said, in terms of valuation, guys, the PEG ratio at 42, this is why I say, like, it's just way too high. You're looking at a 4.75 PEG at $42, which is your after earnings price. That is just way, way, way too high for, in my opinion, a company that, you know, although they're growing very nicely, the competitive advantage is just not there to warrant such an expansive multiple, in my opinion. 6.1 price to sales is also decent. So I hate to sound too negative, guys, but sometimes you just got to call a spade, right? I know this one's been all over social media, all over Reddit, all over Twitter, and people for some reason love it. But hopefully now, with a more logical and objective view of the company, you can understand why you also should possibly have some reservations. Now, is it a great momentum trade? Can it possibly rally even further if Wall Street Bets continues to buy call options on it? Maybe, perhaps. But would I put this one in a long-term portfolio? No, because all my companies in my long-term portfolios have high competitive advantages, high levels of moats, and difficult barriers to entry. And unfortunately, the competition for this one is just a little bit too much for me. And that is everything for your earnings reports. Hopefully, you guys enjoyed that. Now, let's dive into some technicals, shall we? So taking a look at the SPY. Taking a look at the SPY right here. So down 0.46% on the day. So what you'll notice here, guys, is yes, we are still holding somewhat of the relevant area of support, which was 600 down to about 595. All is not lost. However, we have now sacrificed the daily uptrend. The lower lows are now set. So I'll remind you guys, with heavy momentum to the downside, any bounce at this point favors the bears for a lower high for a daily downtrend rollover. If that is the case, or if we flush right away, use the support level as resistance and flush more, understand what we're going for here, because this will be important in the next few weeks. Going for weekly higher lows. Anything above 590 is just looking for a weekly higher low for possible weekly trend continuation as we had right here. But if we lose those lows, guys, we're just going right back into this extended range of consolidation, aka the gulag, which should stop at about 585 down to about 575, roughly this 10-point range below the 26 EMA. Good thing, though, if you look in the context of this bull market, we haven't really stayed much below the 26 EMA when we come down into it. We've come down close or into it a few times this year. Usually has been a good buying opportunity. It's very normal, guys, every year to have at least 3 or 4 events where the market pulls down 5 to 7%. And this just could be another one of those incidents when the SPY does pull back. So rather than getting shaken out by the short-term daily chart noise, focus on the weekly charts and focus on the monthly charts as well. Even if we do have a more extended pullback correction for the markets, Where are we going on the monthly, guys? We're going to the 12, right? The market does this all the time in the context of bull markets. You see how many times we get extended, pull back to the 12, get extended, pull back to the 12. You know what I mean? Then you had the 2018 interest rate temper tantrum as well. Can we pull back to the 12? Sure. We've done it a few times. I'm not saying we're going to go there, but can we have a little bit of monthly give back? Yes, we've been sideways for 3-4 months at this point. It's going to be a very volatile market. So all things considered, don't get shaken out by the noise. Focus on high quality companies and try to buy them when they're out of favor, such as a lot of big tech, very solid companies are right now. Now let's move into the QQQ, shall we? So the Q is down a whopping 1.18%. Definitely the loss leaders of the day. And unfortunately, we have now sacrificed the daily uptrend as well. Lower lows are put in place. We just lost the 522 and lost the all-time high area, which was resistance. Now it was support briefly, smashed through it. So unfortunately, guys, this is now resistance once again with such a big engulfing move. Even if you get a bounce, guys, this V-shape is the unlikely scenario, right? If you want to see the bulls turn this around, it's probably going to be a two-step process of recovery. We will monitor this one very closely. However, the engulfing move now does favor the bears for a lower high into previous support, right? Which is now going to be resistance, and possibly for the rollover to lower lows. If that happens, in either one shot of continuation, because we have high momentum right now to the downside, we can either flush to level right away, or we can do the two-step process where we bounce and then flush down into it. The next area is 515 to 510. We'll see how it holds up. It held up every single time so far. It held up after DeepSeek. It held up after Powell. It held up a few times after Powell as well, other than this little smash through the right there. It held up through the last round of, well, the first round of tariffs, Canada, Mexico, and China. We will see if they can hold this support level once we come into it as well. On the weekly, guys, same concept as a SPY, right? Weekly uptrend is good. The weekly higher lows are all the way down here at 509.52. So the bulls right now looking for a weekly higher low to possibly expand into the weekly uptrend as well, but always going to rely on NVIDIA earnings, in my humble opinion, to lift the Qs back up to their former glory of just 2 sessions ago. So anyways, guys, I have to take all these drops with a grain of salt. It's freeing up a ton of buying opportunities on extremely high quality companies. But I'll repeat, this is not the market to go crazy chasing names like Hims at the all-time highs, like they just had after the Super Bowl, chasing names like Palantir at 125, chasing names like the SMR plays, Constellation Energy, you chasing plays like VST at the highs, right? Not the market to do that. VST pulling back, all the hype names, guys, you'll see. They're blowing them up one by one, yeah? VRT, another one, blowing them up one by one. ASTS, ASTS not doing too bad, as a matter of fact. I stand corrected. They were big red today, but ASTS, I'll be highly, highly, highly skeptical of this one as well. Take a look at the nuclear reactor plays. Those were all the rage a few short months ago as well. Those down. Company like Oklo, same thing. Those are down, guys. And if you take a look at, I haven't looked at these in a while, but I'm pretty sure if I pull them up here, the quantum computing plays doing absolutely nothing either. So they have crushed all these momentum plays one after the other, guys. Do not get caught up in these short-term momentum plays. Do not get trapped at the top. That is not what investing is all about. Can you take some lottery plays when they're hot? Sure, but I don't want to see you guys losing an absolute ton of money trying to chase all these hot momentum plays. You guys also kept asking me about SoundHound all the way up here. Now nobody asks me about SoundHound anymore. Nobody asked me about SoundHound down here. Everybody asked me about SoundHound up here. Now I haven't gotten a question on SoundHound in like 3, 4, 5 weeks because it's just down, 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 right? So it just goes to show you how fast the investor sentiment can shift on these companies. Do not get trapped, guys. It's fine to play a little bit on these, but you have to know what you're getting yourself into. Focus on the fundamentals because it's very funny. When those companies are rallying, nobody thinks of fundamentals. But when the market pulls back hard, now suddenly everybody likes to think of fundamentals once again. Classic market psychology for you 101, right? Moving into healthcare, right? Moving into financials. So financials down on the day overall, but I wouldn't say that this chart is looking terrible, right? We know where the levels are in terms of the big levels. Well, unfortunately, they're not on my chart, so we don't know where they are, but let me draw them for you again, yeah? So this whole area was the big area of support that we lifted off from. The bulls at the end of the day, I want you guys to focus on the weekly timeframes moving forward, okay? On the daily, we're going to have a ton of noise. So yes, we've lost it. Daily downtrend is in play. Not quite losing the 50-50 last line of defense of support right there. If we have some follow through to the downside and we get the daily downtrend, focus on who's in control, right? Anything above $47 looking for a weekly higher low for possible further trend continuation in financials. Financials has been relatively resilient over the last few weeks as it's just holding the highs since its earnings. But if we see some deterioration market-wide and financials gets dragged down as well, looking for a higher low for possible further trend continuation, and that would also be conducive to setting up probably a monthly continuation of the range of accumulation here as financials just kind of grow into this kind of lofty move that they've had, and then eventually probably make the move higher sometime later on in the year. Financials not looking bad, holding up. Just keep in mind, study that rotation, guys. So when the banks come down, those might be some good deals. Right now, it's big tech coming down, and that is going to be the focus of my good deals going shopping now. So healthcare as well. So healthcare, I don't know why these charts have erased all of my boxes. Let me just do a little quick back check here. Is this one okay? No, all my boxes are gone. Why are my boxes gone, guys? Did you guys touch them? I don't think you guys did. Give me a second. Let me try to fix that. I'll be right back. All right, my bad, guys. Can't get them back, so I guess we'll have to do the TA live. So we're going to spend a little bit of time doing the TA here. So essentially what we're looking at, guys, into resistance right now for the XLV, but their bulls are trying to mount over and above, right? So we got two major things to look out for. One is this beautiful inverse head and shoulders pattern that we're going to look for the break of resistance. The bulls are going for the weekly trend change. Healthcare remains a very solid sector overall. My favorite play of all has to be UNH. UNH really coming down to the bottom end of their support range, which I will have to draw again. Don't know why they're not here. Oh, there they go. There they are. So there you are. So UNH, my favorite play right now, below the 200-week moving average, which rarely happens in the company's history. I do think this is a fantastic buying opportunity overall. So that is the fact of the matter. Healthcare not looking too bad as a sector to consider for possibly some expansion to the upside if we continue getting this slight rotation from tech and growth to a more value and defensive oriented market. Moving into SMH right now. So SMH finally loading the support resistance boxes, rejecting from resistance. It's going to be all about NVIDIA earnings over the course of this week, guys. After the close on the Wednesday session, NVIDIA. We also have Salesforce, which could be an interesting play for SaaS, right? That being said, 260 to 250 remains short-term resistance for this index, and short-term support remains 232 down about 220. Stuck in 6 months of an accumulation range here, guys. If you had more to the downside, buying opportunity, you guys know which way I like to play this one. If we come down, I'm going to be looking to sell short puts under the market on my favorite companies, two of which right now are TSMC. TSMC short puts around the 180 to 175 level. Very juicy opportunity in my opinion. And NVIDIA, if they somehow come down after earnings, guys, I really like this 115, 110 range. Unfortunately, the trading view is not loading my support resistance boxes right now, but all you need to know is that area 115 down about 110 is relatively solid, has been holding up roughly over the last, let's call it 6 to 8 months of trading for this company. So I'll be looking to play short puts on semiconductors if they continue falling a little bit. Take a look at the IWM Russell right now. The Russell is definitely not the best sector to be in right now as we move from a risk on, well, it never truly was risk on, but we're moving more risk off at this current point, right? You can see two clear levels right now. One is overhead resistance right there, and one is going to be below support all the way down here at the lower end of the range. So if we come down further, we're looking at support between 215, roughly down to about 205. Overhead resistance stays planted at 227 to about 223. So there's only two trades on the Russell, guys. One is the infamous breakout, retest and run. That would be a condition for a long, but also if we revisit these lower end of the ranges, coupled maybe with some daily oversold conditions, possibly could be a decent, tiny little swing trade area. There you go. The support box. Sorry, guys. I don't know what's going on. I have very fast Wi-Fi here. It's not the Wi-Fi. Maybe TradingView servers updating. It's probably pretty late in the morning Eastern right now, probably like 1 a.m. Apologies, by the way, for the timing of the video. I do the best I can with the time zone difference, preparing the earnings, preparing what I want to say as well. I wake up pretty early to prepare these, but you know, by the time I film, edit, and then put the video out, sometimes it gets to be pretty late. So my bad for that, guys. But at least the content's coming out, right? I'll be back home in about a week and a half. So you guys will get to see the updates in a more real-time fashion back to Eastern time zone. Moving into the Dow Jones right now, the Dow Jones really sliding. We were noticing this, right? Tightening range at the highs. The bullish leaning bias was for a break up. But what can you do? Friday, Monday, and possibly the Tuesday session as well will be negative. So it started on Thursday, pulling through Friday and into Monday. So we're coming into support 43.3 down to about 43,000. Below that, if we flush even lower, 42.5 down to 41.9 is going to be the area, especially here, down to the 200-day EMA. Not saying it's going to go there. I'm just saying if it does, just understand what the bulls are trying to do, trying to establish some weekly higher lows for possible further trend continuation to the upside. Take a look at your 26 EMA. That has been the level that the weekly bulls have loved playing defense at roughly the last 2 years of trade. So I do expect the bulls to play a decent amount of defense right here. But if we flush a little bit lower, as we did back in the early stages of January, just understand what we're going for here. Weekly higher lows, still somewhat in a wide range, trapped, no new all-time highs, but we will want to see potentially some expansion. And if there's a rotation from, tech and growth more to value, I think the Dow Jones should have a better chance of holding up than most. That is pretty much your sector recap overall for that. Now, moving into Bitcoin. Bitcoin also risk on to risk off. Bitcoin was pretty much doing nothing, right? Barcoding for roughly the last, 2-3 weeks of time. And now with the Friday and Monday volatility, well, of course, you get a move to the downside. Have we lost any major levels? No. Still support remains 91,000 down to 88. 200-day EMA is at 85 right now. Is it a decent little location for a swing trade long? Yes, absolutely. But if you are swing trading, that means you will have to swing trade with a stop loss. And the stop loss will have to go below that 88,000. Because if you break that 88,000, guys, well, it's going to be daily downtrend, right, into possible rejection and resistance, lower high and lower low follow through down to about the 80K range. So I'm not willing to call it just yet. I'm just saying, if you're trying to trade this one with a swing, do not forget, trade it with a stop loss. I'm still holding all my long-term Bitcoin. The weekly bulls have not lost any major levels. Still roughly consolidation between where? 104 to 101 highs, right? If you want me to draw a little box again, unless it's, watch, I'm going to draw it and they're going to load, right? Little box of resistance, yeah? 105 to about 101, trapped below that, and trapped above support 92 down to 88. So just keep that in mind for Bitcoin. And the altcoins, guys, I've said it once, I'll say it a million times. Nothing in crypto is going to run until Bitcoin breaks above, holds the all-time highs, and starts pushing 110, 115, 120. You are not going to see a rotation into Ethereum. You're not going to see a rotation into any of these altcoins. So they will continuously just bleed down if Bitcoin, lead pair right now, is not able to break into net new highs. But are things looking extremely dire for Bitcoin right now? Not really. We have not lost any major levels. This is still weekly consolidation and monthly consolidation, well, at the all-time highs. But I know people are getting very impatient with crypto overall. That's the nature of crypto sometimes, guys, right? Very volatile, usually very volatile. And when it gets range bound, people just lose their minds. Now, moving into Apple, so some of our big tech names. So let me just check the time of the video real quick. Okay, we'll do these quickly, then take a look at the portfolio. Apple holding up better than most, up 0.63% today again. So I'll remind you, since the charts are not loading, I'll stop saying it. And you guys can just assume that the charts are just not loading, yeah? So you have a big level right here, right? A lot of confluence down there in terms of Apple. Guys, you can't make this up, right? The level is very close. I was trying to highlight the overall general area, but we do have two minor levels, 235 down to about 231, which is your closest area of support. Back down to the weekly moving average below us as well. So if Apple gets dragged down in the mix, just looking for a higher low, right? Anything pretty much above this point, above 227, looking for a daily higher low for possible further trend continuation. If Apple pulls back too much and too hard and loses this level, well, you're going into a daily downtrend. You're going into weekly consolidation as well. At that point, you'll just be looking for a higher low, anything above 219. Looking for a weekly higher low for possible further trend continuation through 2025. Am I very bullish on Apple for the year? No, but am I bearish on the company for the year? Not so much either, right? I think the valuation is very high, too high for me, as a matter of fact, to heavily position. But is there a swing trade pulling back down into 230, maybe going for a little bit of a swing trade long with a stop loss below these guys right here, 226? No, not the worst swing trade not the worst swing trade in the world. And that is everything for Apple. Moving into AMD. So AMD, this one's going to be highly beholden to the earnings results that come out for NVIDIA later this week on the Wednesday session, of course. I'll remind you, AMD keeps pulling down and keeps getting cheaper and cheaper. At 108, again, the PEG ratio is sitting at a very cool 0.57% for a company expanding revenue and EPS at very, very attractive clips, expanding free cash flow, expanding margins as well. The fundamentals of the business are improving, but sentiment on the company still remains somewhat in the toilet, let's be honest. Right now, the support zone remains planted at about 110. You can call it 110 to 115 roughly, all the way down to about $100. So the bulls are still looking to play defense in this overall general area. However, we know that for AMD, it's been stairs up, elevator down, and it's been no different. 2 weeks of very muted gains to the upside. 2 days is all it takes to undo the entire move. But we know it's a monthly downtrend, clear monthly downtrend. It is a weekly clear weekly downtrend as well. And now also it's possibly looking to go back to a daily downtrend as well. The bulls never able to set the daily uptrend. First things first, need to get a daily uptrend going. Only then can we start speculating that they'll be able to reverse the weekly time frame as well. Right now, what you're seeing is a basing effect, the stock just moving into consolidation, trying to accumulate at the lower levels. I'm not so interested in playing AMD as I am playing TSM and NVIDIA, but could this one be a longer duration swing trade if you have the patience and you like the risk to reward profile of the company? Yeah. And we're probably looking for a swing trade all the way back to about 145, 150, but that may only happen over the next 2 quarters. Moving on to Amazon right now. Amazon pulling down hard, almost daily oversold, guys. This is a top to bottom drop on Amazon at this current stage in the market, right? Talking about a 12% top to bottom drop on Amazon. Now you go back in time the last 2 years and you tell me whether buying Amazon 12 to 15% declines is a good buying opportunity, right? It happened here where they were down 20% after the Japanese carry trade. It happened a few times so far where they go down 13%. This one right here, September 2023, 15% overall. So you guys tell me, when Amazon pulls back, while it's improving fundamentals, when it pulls back 12 to 15%, is it a good buying opportunity for the stock? Yes, absolutely, guys. Now, even though the daily looks somewhat dire, daily downtrend and accelerating momentum to the downside, we have lost our most recent level of support as well, which was roughly this one right here, right? 220 roughly was the last line of defense. The bulls have now lost that as well. Weekly into consolidation, losing as well the major level, which we just saw, right? It was a nice weekly uptrend. We were looking for the higher low. Unfortunately, they lost it. So can we see something like a lower high, maybe even into lower low, weekly downtrend? Yeah, it's a possibility, but I'm not willing to call it just yet. Coming into the 26 EMA, which has been a point of contention for the bulls a few times over the course of this 2.5-year rally at this current stage. What are we looking for, guys? The monthly time frame should say everything to you. We are just looking for a monthly higher low for possible further trend continuation. Can Amazon come back down to the other major level of support? Absolutely, guys. Right down here, about 200 to 190 is the next area I'm going shopping for on Amazon. I have some Amazon. I wanted to buy this zone of support. I bought a little bit of Amazon, but I will be going a lot heavier on Amazon if we do break down to this more solid area, 200 once again, down to about 190. That would be a top to bottom decline on Amazon, guys, of 15 to about 20%. And in my opinion, you have to buy those pullbacks on Amazon. At the current stage right now at 215, the peg is about a 1.69. Drop it another 10%, you'll be looking at a 1.5 peg. I think that's an attractive valuation for a company that is growing quite well across all lines of their business. Moving into Google right now. So Google also remains somewhat challenged, yes, ever since their earnings. So Google earnings pulling back a little bit. Daily is now unfortunately a downtrend. We were looking for the forming of a base of support. Yeah, the bulls were trying their best to mount some form of a base of support. We lost the most recent level of support. We were slightly below it. We were looking, can they just pop back above and reclaim this area quickly? Or will they use it as resistance and flush a little bit lower? Well, it was option number 2, right? Now we're coming back down to the 200-day EMA, 175 to 180. And if you zoom out to the weekly time frame, guys, this should be firing off some sort of a attractive opportunity in your mind here. I've been calling this area for a while, guys, talking about this 180 down about 170 region. Fantastic region for Google overall, in my opinion. So even though, similar to Amazon, we've lost the weekly uptrends by flushing the lows, could even end up with a weekly downtrend scenario, right? We are just looking, guys, for monthly higher lows. That's all we're looking for across all these names. They do pull back all the time. How many times have we pulled back for monthly higher lows on Google in the last 2-something years of rally? A lot. It does it in its company's historical averages as well, right? Monthly higher lows. Look at this area, 12 EMA on the monthly, 170 to 180. I think it's a no-brainer area to buy Google, in my opinion. Unfortunately, the valuation right now is just not on the chart as it continues to load very slowly. The PEG ratio right now is sitting about a cool 1.4. That's the cheapest valuation in all of big tech. I'm very bullish on Google, so I do have some Google shares that I just bought at 185. If it drops lower into the 180 to 170 region, I will not hesitate to buy even more. Moving on to Meta right now. See, some charts load instantly. I have no idea why. So anyways, Meta loaded instantly. So Meta overall, after a, how much is this? 20-day rally, everybody was asking me, should we buy Meta up here? And I was saying, no, wait for the dip. Well, now we're waiting for the dip, right? So overall, the daily has come undone on us. Big momentum to the downside. I was telling you guys, watch out. It's daily overbought. It's overbought everywhere. Now we got the pullback. Now, a resulting pullback from such a big rally to the upside could open the door for lower high into lower low, and that would just be continuation of this weekly consolidation move. Anything above 591, looking for a weekly higher low for possible further trend continuation later on in 2025. Overall, not that bad here, guys. The level we're looking for maybe is the 630 to 625. That is where some form of support starts coming in. It's these guys from back there. That would probably result, if we do come down here in one single shot, which would be amazing, but possible, that would be probably daily oversold on Meta, and there could be a nice little bounce swing trade opportunity for a swing trade in this stock. Fantastic company. The valuation right now is a little bit high, 2.3 peg. It is up there, with Microsoft's valuation. So not the best valuation, but the company's forward prospects for the next 1, 2, 3 years are looking quite good. So if we do come down here, 635, 620, I'm not going to add any to my long-term shares, because the last time I added to my long-term shares was like sub 500, like 480. But if I'm looking to start a long-term portfolio, would I add Meta into my long-term portfolio at these lower levels? Just start a position that I'm holding for the next 5, 10 years? Yeah, probably I would. In this company as well, right? Very extended from the 12 EMA. Any pullback on the daily, weekly, we'll just be looking as well for a monthly higher low, possible further trend continuation. Same thing as Amazon, same thing as Google. Moving on to Microsoft now, the problem child of big tech. Microsoft down to about 404 on the day, flushing the $400 level. This is the first time we've had a flush of the 400 since the Japanese carry trade unwinding all the way back in August. But still, we have not lost any levels. Support remains planted. 410 down to about 390 at the lows, right? Currently still trading below their 200-day moving average. Momentum on this one looks pretty weak right now. And unfortunately now, daily downtrend simply resumes. At this point in time as well, the weekly remains in a weekly downtrend as well. But since we have not lost any major levels and Microsoft continues to improve fundamentals, very strong Azure growth. Yes, they're spending a little bit more money. There was an article saying that they can't see, you see it right here, right? Microsoft has canceled leases for hundreds of megawatts of data center capacity in the US, raising concerns about its AI spending and potential market oversupply. So this was an article put forth on the Friday session, and Microsoft today, Monday, spent all day saying, no, that's not in fact true. We're still spending as much money on CapEx. We're still very bullish on AI. We're still very bullish on expanding our offerings as well. So you got to take these articles sometimes with a grain of salt, but clear overreaction from the markets. And I did benefit from this one almost at the lows of the day for a buying opportunity for even more Microsoft, because this company has the most fantastic fundamentals that you can possibly ever find in the entire market. Very high gross margins, very high net margins. The price target is also at the 510 level on the average. EPS steady up and to the right. Love to see it. Revenue steady up and to the right. Sitting on a tremendous amount of cash, guys, as well. Nothing wrong with this company. It's just been range bound for a year. So will I buy a company at lows of support when it's been range bound for a whole year while improving its fundamentals? Yeah, absolutely I will. Moving on to Netflix right now. So Netflix down 1.46%. Same thing as Meta, right? Fantastic rally since the earnings season. Now, unfortunately, coming undone. Daily uptrend has now been lost as they lost the higher low. If the bulls have a bounce, I'll remind you what we're looking for here. Probably just a lower high into lower low, daily downtrend continuation, because it needs to pull back on the weekly, guys. Anything above 825, looking for a weekly higher low for possible further trend continuation. Next area of support for Netflix remains planted 935 down to about 900. That is a possible swing trade area, or also an area if you're looking to add to long-term shares for a long-term portfolio. Decent considering all the record beats in the most recent quarterly earnings. No red flags on Netflix, guys. It's just look at the monthly, right? It's ran a ton, and now it just needs to pull back a little bit. Completely normal price action for this company, in my opinion. Now, NVIDIA down about 3% today, but all is not lost. I'll remind you, though, it's going to be very tough to derive short-term price action on NVIDIA before their earnings. Here is the NVIDIA expected move after today for their earnings, and you guys will see it's a pretty big one, right? The expected move is going to be probably, well, I'll just tell you guys, 8.5% up or down. So 8.5% up or down, where does that put us? If we were to stay flat now through earnings, well, 8.5% to the downside puts us exactly where I want the stock, almost 116, 115 below the 200-day EMA into our support box area. But 8% to the upside from here will put us right back, well, not close, but right back into the all-time high region, 143, 145, 146, that type of area, right? I am expecting some very good earnings from NVIDIA overall, and at least we're still holding above the most recent range, which unfortunately has vanished, but this has always been the support range. We blasted through it recently, coming down into it. We'll see if the bulls can hold this one as support. I would like to see us hold this region leading into earnings to really give us the best chance of one of two things. Either expected move down into support, which would be a buying opportunity in my opinion, or move into the highs and start pushing on to brand new all-time highs and renew some bullishness into the markets. Companies looking good in terms of fundamentals and both technicals. So we'll cover this one a bit more in detail tomorrow on the Tuesday video. Moving into Tesla right now. So Tesla down another 2.15% today, guys. I was telling everybody, be careful with Tesla. Everybody wanted to buy Tesla up here, and now it's been doing absolutely nothing for the last 2 months, and people are getting a little bit nervous. Well, as I said, now valuations matter, right? So now without any support resistance box on the chart, you can see price action is king, yeah? Daily downtrend remains. If you flush the lows of roughly a week and a half ago, as we did today and close lower, we are going right down to the 200-day EMA, which is around the 300 range. Now, good thing I had this level drawn out before. Now it's since vanished, so let me do it again. So this level, this 300 level, guys, is a very solid level, yeah? How many times it's been tested in the past? Well, they used it as support back here in 2021. It was also support, the lower end of which 300 down to about 275. It's a wide 10% range, but it's a very hotly contested area. You can see it coming back a few times in the history of the company overall. So I do think that if things get a little bit worse for Tesla before they get better, this weekly downtrend will just continue. Momentum will continue. The daily downtrend will continue. And the next stop is down here, 300 to 275, which could be a short-term buying opportunity, especially if you continue supporting that with some short-term daily oversold conditions. I'm personally not playing Tesla right now. I'm waiting for the flush into this zone and seeing how the bulls will react. And thereafter, I'll be writing short puts below that. 270, 250 seems a lot more fair to me than where we just were at 480. So keep that in mind for Tesla. Just looking for monthly higher lows for further trend continuation. So you guys notice a pattern that's happening here across a lot of Mag 7, yeah? Looking for monthly consolidation for higher lows for possible expansion. That's what's on the table here, guys, probably for the next 3-4 weeks of trade. Moving into Palantir right now. So moving into Palantir down 10.53% today. Look at this monthly candle on Palantir. This closes in just 3 days worth of time, yeah? We were saying how overbought all the time frames were. The monthly was overbought. The weekly time frame was heavily overbought as well. Once it loads, heavily overbought. The daily time frame moving into 125 was extremely overbought as well. So what are we doing here, guys? Buying time frames that are entirely overbought. Like, what are we doing, right? Don't do it. It's just not worth it, right? I know Palantir is on everybody's minds right now. Everybody that feels they missed this entire rally just feels that, well, maybe I can get in here and maybe it goes to 200 and even I can make some money too. Dude, if you start thinking like that, guys, you already lost, right? It's like going to the casino with $100 and thinking you're going to make 1,000. Like, you've already lost if that's the case, right? So that being said, still hunting for some lows. Daily uptrend is now clearly lost as a whole, trying to fill the gap fill from earnings, which would be 83.66. We'll see if it happens on the weekly chart. Not looking terrible, right? We know that the most recent area of support is going to be those highs that we just came out of before blasting off with earnings. That's the new support area, right? 84 down about $75. I think that will be one of the resting locations for the bulls, pulling back down into the 12 EMA on the weekly. All things considered, it's not looking the worst, right? Palantir's done this before. Big move up, consolidation, big move up, consolidation. As long as we don't lose the weekly structure, Palantir is not looking too bad. But can we find a little bit more pain before finding a local bottom? Yes, look for 85 to 75 region. I know. That would be like a 40% pullback from the highs. But that's what happens. Look at this monthly chart, guys. The monthly chart is just way too extended. If we lose the weekly structure, I'm not saying it's going to happen, but if you lose the weekly structure, weekly downtrend, that is going to be monthly consolidation. And then Palantir will probably grow in to its new valuation and maybe just hover for a few months around 80, between 80 and $60 as these moving averages catch up, as the price action catches up, as the fundamentals of the business catch up as well. It would not be such a terrible thing, right? It has to grow into this valuation. It ran too hard, too fast, and now we're seeing the violent pullback start to happen as people start to question their continued bullishness on the stock, right? Moving into SOFI right now. So SOFI down about 2.11%. 14.36. Now SOFI is still holding the relative area. If you want to zoom out here, guys, I'll show you which area the bulls are trying to hold. This is the whole 16 down about $14 range, right? guys. So as I was saying, the whole $16 to $14 range on the charts, right? The monthly time frame paints the clearest picture for SoFi, in my opinion. Looking for a monthly higher low for further trend continuation. Can we break support and go down to 13.12? Yes, the EMAs are down there as well. It would not be the craziest thing seeing in a market environment that's de-risking a lot of hot tech plays that ran a ton in the most recent few months, looking for monthly higher lows for possible further trend continuation. So the short-term time frame is going to be a little bit choppy, as we've seen recently, right? But I do believe coming down into 13, 12, even $11, decent area to continue to buy the dip. Can we buy some SoFi here and then average down? Absolutely. That's what I've been doing. I've been buying SoFi here and averaging down as a product as well. On the weekly timeframes, weekly, now a confirmed weekly downtrend, but all in all, still in a wide range of consolidation, right? So I am bullish on SoFi, but you got to give this one a little bit more time. It's being bunched up with the risk on trade, and we know that that hasn't been doing so well so far. So that is everything, guys, for today's video. Now, I know I said I was going to do the portfolio, but since we did a lot of earnings, let me check what we have tomorrow. I'll probably do it tomorrow because tomorrow I'm only going to do Home Depot most likely. So tomorrow I'll have a lot more, or I might do Home Depot and Intuit tomorrow. So tomorrow I'll have a bit more time with this video because we had to do a big recap for the reasons for the drop and whatnot. Tomorrow, I promise I'll spend 10 minutes, go through the portfolio, show you guys the trades overall. Just understand that I bought some MSFU today, covered up a bunch of my assignments early in the morning. I wrote some more MSFUs, as I was saying, in the top 5 options play. If you focus on the top 5 options video on Sunday, you should know which plays I was willing to fire off today. The Amazons at the lower levels at the expected move, the Googles as well below here, 180, 175, decent play. Either GOOG or GGLL, the 2 times leverage. Microsoft and semiconductors, guys, this week I'm not playing before NVIDIA earnings. I'll wait for those to come out first, right? But those are the only moves I'm looking for. Amazon, Google, Microsoft overall. A few new trades here and there. I'll show you them tomorrow, I promise, okay? But now about an hour and 10, got to wrap it up. So hope you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these Monday through Friday after the close. Well, since the time zone difference is going to be more after the close, I'll try to do these videos earlier, guys. You know, I wake up like 8:30 and try to put these videos together to get them out by like 11, 11:30. Sometimes it takes a bit longer, so apologies for that. But in the future, like tomorrow and after, I'll try to get these out at a reasonable hour for you guys, maybe like 9, 10 a.m., 9, 10 p.m. Eastern. It's a bit more reasonable, right? But thanks so much for watching anyways. And if you have any questions, also free to leave them down below in the video description. And in the event you guys want all of my trades in real time, here are all of the trades. We got to sign some trades last week. ETH, Grab, Google, and Amazon. You already wrote decent, juicy covered calls on these so far. But if you're interested in having all of the trades in real time, the wheel trades, the call option trades, the leap option trades, the call debit spreads, the put credit spreads, the share swing trades as well, all of those are included here. All of my trades since the inception of the Discord. The green check marks are wins. The red little circles are tiny losses. If any of that interests you, the link is down below in the description. We also do daily morning live streams Monday through Friday for about an hour or two after the close, and I trade live and answer all your guys' questions on your stocks and your options. And if you cannot watch, they are always recorded, of course, and you can also ask me all your questions in our chat rooms all throughout the day, and I'm usually very fast to respond. So thanks so much for watching as always, guys. Apologies once again for the longer than expected video, but, you know, recap of the pain, the earnings, and going through detailed TA since I haven't seen you guys in a few days. Hopefully you guys enjoyed it. That's it for me. I'll see you guys tomorrow. Take care and peace.